Hello everyone, welcome back to the Maverick channel, and on this channel we talk about digital currencies and the trends of cryptocurrencies. Guys, hype is not our friend. Hype is our friend, and looking at the trend is always your friend, but in nascent markets you can completely get wrecked. So there's certain philosophies, there's a certain mindset you need to have, and in order to get that mindset, in order to develop that mindset, you need to stick around in this space, and you need to develop that intuition by looking at different things that's going on, different things that are going on, how different developments are going on, what softwares are being released, what innovations are being created in the cryptocurrency space, in order to develop that mindset to help you understand how to better yourself, how to truly benefit from this movement. And what I've noticed from the past, the best way to benefit from the crypto space is by sticking around, being patient, staying away from the hype, or rather positioning yourself such that when the hype starts, you're already there. So that's the philosophy I've been writing on. Try to explain, to sort of drill in that philosophy to my listeners. In other words, the hype is our friend, but knowing how to get a hold of products before the hype obviously is the best strategy. And even if it's during the momentum, I think patience is our best friend. So there was this article written by Binance Smart Chain. Guys, if you like things that are going to improve you, to improve your thought process in this space, then stick around and listen to this article. But if you want another video that's going to tell you this coin is going to moon to infinity and get 3,000%, that's your choice as well. Then the other thing I want to review, that I want to start with, is this short tweet by a guy called Ken Kanaki talking about the Fetch.AI Ecosystem in relation to the metaverse. So I'll start with this, then the short article from Binance, and I think you would have gotten quite the value from this video. So, to truly understand a metaverse, one needs to watch anime. For e.g. Sword Art Online, metaverse is a fantasy world where there is no limit to imagination, which can truly be seen in animes, and Fetch.AI FET will play an important role in building this. So, small thread to read. Before this metaverse hype or Facebook changing its name to Meta, there were only many metaverse related anime. The two main components of metaverse are, you have players, and you have non-playable characters, which are known as NPCs. NPC is an in-game character controlled by the system. Of course, those that have played video games like GTA, they're those characters in the game that are essentially controlled by the AI or the video game. So they're non-playable characters. Number two, let's talk about the NPC or the non-playable characters. So by the way, guys, let me finish this first. Each metaverse can have their own non-playable characters for players to interact or play with, but question comes how to train those NPCs as the game progresses, because they too need to have emotions for the metaverse to grow. So this is where Fetch.AI comes in. So guys, before we go into this, these guys, there's a project called the Meta Key, and I don't think I'm going to repeat, guys. If you want, go look at it. I'm not going to try and shill it or try to convince you. Anyways, there was this video I watched. It's 56 minutes long. I'm not going to play it, obviously. And this is the guy with the ponytail or man band. He's the host of the show, and this other guy is the guest. Their company is called Voxodeos. I think in the future they're going to give away like 250 ETH or close to $1 million, something like that. So what these guys are doing, they're looking at different projects, including the Meta Key. They create replicas of those characters, and then they can turn them into non-playable characters. There's a lot of attention being drawn towards non-playable characters, and we also know there's some cool movies out there that have been made specifically for that. So it's pretty cool. Anyways, continue with this thread. Number three, to train your non-playable character or NPC player, one can use autonomous agents. So Fetch.AI is a company really fronting the machine learning, artificial intelligence kind of narrative. And they're creating these autonomous economic agents that are essentially virtual assistants, that could be virtual assistants for a human, for a machine, for anything, for software, for virtual characters, for real characters. It doesn't matter. They are supposed to be interoperable and essentially agnostic in the way they operate. So that's why he's talking about Fetch.AI here in that context. Autonomous agents will read the player behavior, because what they do is that they contain modules of different code, and they store this code. And the way they're being designed is such that they can actually be interoperable with other chains and other kinds of infrastructures, not just blockchain. So autonomous agents will read the player behavior and train your NPC, or will program your NPC in such a way that they too will feel real. So we're talking about NPC. He posted something here. Number 4, companies can also collect data to build algorithms using Fetch.AI. Yeah, this is pretty much obvious. Autonomous agents which will train your NPC as per algo and let them evolve as per player behaviors as the metaverse progresses. And I think, guys, that was pretty much it about this tweet. It's just that there's the use case of these agents that are essentially going to be the data arbiters of this Cosmos ecosystem, of the interoperable ecosystem. And obviously there's going to be multi functionalities of these agents in what they can do. Right now we know them as autonomous economic agents. So I think you can unpack that one. So this last article that's going to really shed light and input some certain morals that we all need to instill into ourselves. The Binance ecosystem is beautiful, and therefore they're not going to publish something that's going to tarnish their reputation. And this speaks to the trader out there, the long-term trader out there. This, I think everyone should read this. So it starts like this, and it's a short article. Crypto futures basics. So futures, most people fear futures. Even us, we think we're traders, but this whole thing of future trading, how to trade futures with a small account, okay? And there's other pointers they put in here that are really helpful. So key takeaways: by setting a realistic profit target, you will be less pressured by the outcome of every trade, and this should help reduce the trading stress and have a corresponding positive impact on your long-term results. Number 2, risk proportionality to your account size. Never risk more than 5% of your capital on each trade. Never risk more than 5%. Trade only high probability setups. Conduct a strategic analysis of risk to reward and trade fundamentals before entering a position. Compound your profits, compounding, guys. Abstain from withdrawing profits and reinvest them in order to snowball your capital to a point where it could fuel your income or even replace it, guys. Yes, I need that pointer right there. I need it for myself. So if you're familiar with buying cryptocurrencies in the spot market, but are tired of volatility swings followed by periods of slow growth in the cryptocurrency space, then crypto futures trading might be for you. You may think, don't traders need to have millions in the bank or whatever? Don't you need to know everything about the markets to participate and so on? Today, we'll be looking at some of the tips that could help your futures trading aspirations launch in the right direction before we set off. These tips are not financial advice, but they are rather useful philosophies to consider before committing to trade. So, guys, this was a beautiful article. So, set realistic expectations as number 1. So, first and foremost, it's crucial to set out goals and expectations. In reality, trading is very difficult for anybody. It's a game with massive potential for wins and losses. Even the legendary traders of Wall Street have experienced major losses in their careers, and they're supposed to have their finger on the pulse of their trades. It's important to set realistic profit targets. Remember that even successful hedge funds and fund managers struggle to make more than say a couple percent a month on a consistent basis. So novice traders with a small capital base of, let's say, $5,000 shouldn't expect to make $5,000 per month or even cover living expenses. Instead of aiming for 100% returns per month, a more realistic target is to grow a 1 to 2% per month on a consistent basis. So guys, persistence and consistency. By setting a realistic profit target or expectation, you will be less pressured by the outcome of every trade, and this could help reduce trading stress and have a corresponding positive impact on your long-term results. So they have a trading calculator here. I mean, a futures calculator here, so you can check it out from the article. I'll link this article in the description. So prolonged success demands a strategy, and being proportionate with funds is a key piece of strategy. Done properly, slowly growing a small account into one that can sustain you, and that you can sustain, is a worthy achievement. So you can sustain it, it can sustain you. It's a mutually beneficial kind of arrangement. So the best place to start with any endeavor is to honestly evaluate your current capabilities. With trading, we're primarily talking about your account size. Guys, I think this applies to life as well. So number 2, which is the risk proportionately to your account size. Readjust the perspective you have on your funds. Each dollar should be treated as if it's worth 100 times its actual value. So respect the money that you have. So if you have an account worth $1,000, you should be averse to losing anything more than $10 or 1% of your account value. In fact, professional traders generally keep the rule of not risking more than 5% of their account value per trade. So a professional trader with $1 million dollars account value would never risk more than $50,000. Can you imagine this on a trade? So this is a long-term strategy that demands you to approach each trade with a prepared strategy. The strategy maintains values that protect your funds, cutting off losses early, sets realistic expectations, and protects your emotions. Finances often become associated with self-esteem, optimism, fear, even mental health, and to some extent physical health. Remember, it isn't important how large someone else's account is or how much they trade, win or lose. Your trades are only personal to you, and you should focus on building for yourself rather than in competition. So an approach that values each dollar or any smaller denomination respective of your budget as a precious piece of your portfolio will lead to conservative emotions and focused strategies that guide entries and exits. So crypto futures are great for this since investors can trade with fractions of a dollar or whichever unit of currency that they have. So guys, this appeals to the respect you're having for whatever is going on with your account. Do not just risk everything, but sometimes it pays off. But guys, let's focus here. Do not risk everything, especially if you're trading in futures trading. You don't need to risk your whole portfolio. Number 3, I think it's the last one. Don't withdraw funds out of your account, guys. A seemingly simple tip when starting out is to leave your funds absolutely alone. I think this appeals to the compounding effect. Do not take them out of your account. Since you're trying to build your wealth, you will need every brick you have so that you can slowly introduce larger and larger risks per trade. So as your funds snowball, you'll be able to, at some point, fuel your income or maybe replace it, given you've stuck to your strategies and value. Guys, stick to your strategies. Also, taking money out of your account disregards the value you place onto each unit of your account and then devalues the other ethics you would apply to your trading. So trading is a long-term game and should be respected well beyond instant gratification wins. So in fact, adding funds to your account whenever possible is a great idea. Okay, so of course life can have surprises and the value of trading can easily be replaced by something else that may occur, such as emergencies or other urgent demands. Let's hope that never happens. Number 4, okay, I think that's the last point. Trade only high probability trade setups. A key feature is that it's coupled to trading at low volumes and trading with appropriate leverage. So it's only trading with high probability trade setups. This can be determined through a strategic analysis of the fundamentals you rely on. So following support and resistance levels. So those that are familiar with charts, there's something we call support levels. There's something we call resistance levels. So normally the price can fail to cross past a certain resistance level, and there's certain support levels which are normally at the price below. So the price, if it doesn't go below that support level, then it's likely in a bullish trend. That's what they're trying to say here. So this can be determined through the strategies, looking at those resistance levels, the trend lines, the volume in the market, so the trade volume, and then there's some tools like the Wyckoff. Wyckoff is a very popular schematic used. So Wyckoff schematics for shape and timing, recent market movements, etc. When the analysis agrees with your inclinations, applying more confidence to a trade is more reasonable. So the analysis process should help you further rank risk probabilities in the future as you learn how patterns affect market psychology, institutional influences, and much more. So guys, we know anything can affect these markets. The Fed says something about continuing the money inflation printing kind of quantitative easing thing, and that causes a downward movement in the market, or the opposite, or whatever. So keep track of things like that. Only apply high risk to incredibly certain scenarios, but even then, be wary of your fundamental values. If for some reason the trade goes wrong and you lose on high leverage, will it be worth it? If the answer is yes, then go for it. Number 5, compounding your profits. A technique that can help accelerate account growth is by compounding your profits. When you have successfully executed a trade based off a high probability setup, then you can feel comfortable about continuing your streak. If you set up a further stop loss that favors the trend you followed in your initial trade and place a high risk reward ratio on it, you may be able to further expand your profits. So this should be a technique only used in absolute certainty, as applying more leverage to even a 2% investment at a 10-to-1 ratio can cost you 20% of your portfolio. So winning it could also land you a nice chunk to be encouraged about as well. So setting yourself up for high wins probabilities can set you up for continuations of that positive momentum as well. So in conclusion, setting up a small crypto futures trading is a task not unlike launching one with millions of dollars in it. The same values apply, and each bit of the fund that you risk should be treated with care. So every investment should be based on a high probability for winning, and should never be leveraged enough to take a significant chunk of your account. So you have to be careful. Trading can become intense. Emotions along with other things can easily become involved, but it's important to remember where you started, learn from your mistakes, and think long term. Even if you were trading in order to build a legitimate career in futures trading, it's healthy to remember that it's only money, and that's not everything life has to offer. I think that's some pretty good piece of advice. So losing or missing a trade isn't important unless you learn from the mistake. So winning a trade is only important in that it helps you move toward your goal. In either scenario, practice of growth is more important than growth itself, guys. Practice of growth is more important than focusing on growth itself. So practice makes perfect, and dedication to learning and appreciation for opportunities will guide you forward when trading. Guys, this is the narrative. This is the point. Forget the futures trading. I mean, this is applied properly to futures trading, but apply some of these philosophies to everything you do in life, in crypto, anywhere. I think it's going to dramatically improve your life. And those that want to know, those links that I was opening up, this is the calculator. This is what it looks like, how to use Binance Futures Calculator, and the Wyckoff approach. There's some more details about this as well. You can read about these things. I'm going to post this article in the description. If you want more details about this stuff, please check out the article, and I urge you to read it. I urge you to expand your knowledge in this space, and you never know what might come of it. All right, guys, I hope you enjoyed this video, and I'll catch you on the next one. Take care. Bye-bye.